traders. David here of TradingFibs.com to bring you the technical momentum outlook for week 18, first week of May 2017. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, let's get into the markets as we look ahead for the first week of May as rolling out of week 17. Quick recap here that you can catch the key highlights on of the week here at TradingFibs.com. Again, quick recap here of the charts as well as the chart of the day. And just by clicking here on the full article will take you to the daily trend that is posted here each day, trading session recap. All right, let's jump into some of those key charts here. Let's take a look at the overall ES Weekly representing that ES Futures S&P 500. As we could see, it's been nothing but relentless uptrend, as in week 16, price action just holding to the lows there, regaining some traction. And look at that, week 17 back up to the highs in Q2 of 2017 and closing above the previous week high. So we are regaining that momentum to the upside here on the ES Weekly chart. Taking a look at some of the daily moving averages here. Taking a look at the NQ Tech versus the S&P 500. It was all about regaining traction above that 10 and 50 period moving averages. We could see here the NQ undoubtedly gaining some movement upside as Murray math levels, MML levels, still remain to the upside. And the daily, again, up here in the resistance, but good to see price action regain some traction after a little bit of a challenge and resistance here at the end of week 16. Bang to the upside. The ES flies high on end of the month, trading here in April. Taking a look at the open gaps, which still has a little bit me concerned over the markets. Price action, it's not where we're up at the highs, it's where we are down belows, with not only the two open gaps here, with numerous open gaps to the downside. But be it as it is, market momentum's to the upside. We play the charts to the upside, and we're always ready both directions every day. But bigger picture, uptrend. Here we can see nice weekly opening, 55.01.25 NQ up here, 55.99. Three, count them, three all-time highs here on the NQ this week, with Monday and Tuesday really being the superpower days. Again, very nice action on Thursday with a lot of earnings out, with Google and Starbucks and Amazon. Again, Amazon and Google out with big numbers. Again, other industries, Intel, Microsoft, and yet we still have more coming into week 18. So NQ tech industry leading the trend upside. Again, the index already hitting the 6,000 up there. YM, on the other hand, struggling a little bit. Again, two open gaps to start the week out. A little bit of a pullback, but those all-time highs still sitting up there. So those are dangling in front of us just like a carrot. But again, open gaps to the downside, still concerned about those. All right, last in the recap here, again, note the weekly VWAP here on the 60-minute chart, ES and the NQ. NQ finishing up nicely. No pullback here to the weekly VWAP as the ES did. All right, that's good. We haven't seen this in a couple weeks. Uptrend. Again, you can monitor this every single day to maintain the uptrend, especially for the swing trader, but a nice weekly VWAP on a smaller time frame chart to keep you in the trend. So ES closes out at the weekly VWAP while the NQ holds well above and doesn't come to close it out, or actually come back to hold flush. All right. I want to give a shout out to a chart that forgot to mention. Again, the key idea or strategy here with the T3 strategy, as we talk about each day in the daily trend, is this 5144. This is a EMA cloud from a 1 minute chart. It's overlaid on top of the Sierra Charts platform here. And the Heiken Ashi bars, which again, if you're new to Heiken Ashi bars, sometimes can be a challenge to digest, but the whole idea, it's a trend bar. That's as simple as it is. Very easy to read. It's solid body tail up, trending up, indecision bar, time to hold, time to stall. Either way, still in trend. It's the idea of hanging on and not having to define what the candles on the left here are saying. So a basic principle comes with a basic trading strategy. And so together, lately, we've been using the MML charts, the Murray math levels, which I have tend to use more recently as upper levels, resistance, support, and price action on a bigger picture, as we'll run here through the bigger pictures on the time frame. On the intraday, you take the bigger strategy and you shrink it down to the intraday, and all of a sudden you have yourself a wonderful trading strategy. And so I didn't get a chance to pull up the second chart here, but I wanted to show this chart again. If you didn't catch the video on the daily trend for the end of the week, for week 17, this is what I'm talking about when we're taking a look at price action sitting above the 5144. That's the cloud here, the green. You can throw in a VWAP there. You could even throw in a moving average, a 34 EMA. You can have a 5, a T35. These are all moving averages we've talked about over the months and over the years. Either way, trend looks great on many different studies when it's moving in direction. The key is what keeps you in. Well, MMLs is another way, Murray math level is another way from, as we can see here, the lows to the highs. And so the whole idea is to remain in the trend to the upside as price action moves up. And so what this was a great example here on the 6E for Friday session was the fact that price action on the solid Heiken Ashi bars moved upside from one to the other, low to high, and the fact is I had a gold standard setup. So this is exactly what we're looking for. And so the chart I meant to bring on here was we also had the movement to the downside on the ES for Friday session, which once it hit up here at the highs, regardless of MML or not, which happened to me, there was an MML level up here. But the fact is that HA bars downside core strategy here with the 34 EMA or the T35 as well, all holding in trend. And actually we went from one MML level to the downside. And so nice core strategy to keep you in trend. I forgot to bring this chart up, but I wanted to go ahead and show everybody that in the weekly technical momentum outlook. All right, so let's jump into the charts. Again, there's our daily gap. So we'll come back to that as in our at the end here as far as what we're looking for. But let's go ahead and jump right into the indices. Let's go ahead and take a look at the bigger picture as we see here on the weekly NQ as we hold up here at resistance 56.25 in the scopes, dangling up here like a carrot like I mentioned before. Again, any level up here, keep that in mind. We got all the way up to 60.93. Bigger picture, if we're to go and tag up here in week 18 or moving forward. Also, keep in mind the bigger picture downside would be halfway back. Fibonacci pullback would be major support resistance back down here to 5,000. Seems like a while ago that we were there, but it was only the end of December, so about 4 months ago that the NQ finally broke through that 4,000 on the NQ futures. All right, so keep that in mind. We got bigger levels, but let's bring it down for the smaller time frame. Let's go to the daily NQ. Let's take a look at the range chart as currently we sit here sitting above the 10 and the 50, regaining that traction. Love it. So first level's upside, 56.25, again, all the way up here to 58.59. Again, that will be the smaller time frame looking at versus the bigger time frame. Those will all be levels of resistance. So in the weeks ahead, we're still looking for 56.25 up here, first level of resistance, as long as we hold above the 10 and the 50. Again, any pullback at this point would have to break through these two moving averages and see if we can hold up at 53.12. Looking at the NQ range chart again up here to the overbought. So again, MML levels could reset, but bigger picture. Note, we're in the green. We're in the green turquoise here for the color, but we are uptrend, and that is the key trend here. Uptrend, uptrend, uptrend. All right, taking a look at the smaller time frames on the NQ, taking a look at the 60-minute 4-hour as we lead into next week. Note the 60-minute levels to be concerned about. We holding above that weekly VWAP as we see on the moving averages there at the beginning. Major support pullback would be 55.47. So we go from the 60-minute. We look, where is that on the 4-hour chart? Well, 55.47 would put us, again, only at the level of resistance here on the 4-hour. Any deeper pullback will start to look to 55.07 as well as deep down to 53.90. Now, remember the daily gaps, as we mentioned before, any open gap all the way down to 54.49. You want to keep that in mind. So let's go back to that number again, 54.49. Boy, what a ways we are from there on the 60-minute and the 4-hour. So 54.49 would actually put us all the way down at the lows of the 60-minute chart. So that is viable if for any reason catalyst in the market sends us there. But for now, we hold upside. Keep in mind the upper levels are still up there on the bigger time frames. All right, let's go to the ES. Taking a look at the big picture on the ES. Taking a look at the weekly here, as we did at the beginning. Again, holding to the higher highs. Any of the upper levels will look to all the way up to here to 24.6875. But again, as we any momentum to the upside, we'll be looking back up here to 24.01 to regain those all-time highs, as well as the YM numbers up there. But ES weekly here, all the way upside. Again, 24.6875 would be the reversal here if it were to hit in the coming week. Anything bigger, big picture wise, we'd be coming down here to 22.50 to find 50% major support resistance. Taking a look at the daily and the range chart on the ES. Here we are on the ES on a range chart. Again, like the NQ, a little bit of pullback at the overbought. I use that in quotes, just a level or fractal line in the market. But again, over the course of 4 days here, as the ES holds above the 10 and the 50, note the resistance here, 23.9075, holding up pretty much with the overbought. So if we gain any traction and hold upside, we go for that all-time high again. Again, there's that 24.06. So you got that range, 24.01, 24.06. We'll see what happens there. Obviously, on an intraday, any pullback at this point could, again, come back lower. So deep down to 23.1250. Which obviously would put us in the range of the resistance in the major support. Bigger picture, that's where a major support that we saw back here in April. So for the week ahead, let's jump to the ES. Take a look at the 60-minute and the 4-hour chart. As we can see here, ES from the highs to the lows, closing out near the weekly VWAP. So any traction back to the upside, we'll be looking back up here to around 23.88 for first level of resistance. Anything downside, we'll be looking down to 23.75, as well as, again, as I mentioned before, watch for those open gaps down to 23.53. Big picture rolling into week 18. All right, quick look at the YM here. Taking a look at the weekly YM. Price action again, regaining that traction up to the reversal as we did pull back on the smaller time frame, 29.38. We mentioned it last week. So there we are again. Take a look at the daily YM versus the range chart. Again, up here, resistance. Haven't hit the overbought up here, 1,094, but look for the pullback to at least the 10 to 50 if we are to come down, especially hit those open gaps. Major support resistance down here at 625. Anything lower will be going down to 313, which would be support on both the range charts and the YM. Let's go to the smaller time frame on the YM, 60 and the 4-hour charts. As we can see here, support at the weekly VWAP. So overbought, resistance on the higher time frames found itself pulling back here to the weekly VWAP support. That's good to start. Anything back upside, we'll be looking all the way up to 21.055, and the 4-hour chart as well up here all the way up to 172. 150. Again, what I like to do is I like to see the connection between the 60-minute and see if there's any numbers that are the same. So 977 would put us just right above the resistance here, and 016 would put us right up here at resistance. So overbought and resistance, those are the two levels I'd be looking into the week ahead. Any pullback, 781 to start, 781. And then anything deeper, we'll be looking at 625 support down here, which would be major support here on the YM. But keep in mind, got those open gaps. So 538 would be the first level I've been looking at. But we have numerous open gaps to the downside. All right, taking a look. Let's roll it up here with the crude here. Again, big picture on the crude. I want to show you the open gaps here on the crude. Check it out. Weekly open here, 49.70. Again, we got open gap up here that I was thinking we might just go get that 55.41, but crude being what it is, there it is. Pullback, price action. Again, numerous open gaps downside will yet to be seen. Let's go ahead and take a look at the MML charts. Here we see the weekly CL this week hovering around the major support resistance. So upside, we're looking at 62.50. I think it's going to be some time before we get there. But downside, 37.50 as we just wallow around this major support and resistance. Let's take a look at the CL daily and 4 hours. So price action after hitting the MML this week. Upside at the resistance, pulls back. I'm sorry, daily. That was prior. It was this week. Downside, losing that traction underneath the 50 and the 200 period moving average. So momentum now downside on the crude. So we'll be looking at maybe 46.88. But if we hold here, like I see on the 4 hour chart at 48.44, any movement downside still maybe 47.27. But if we hold here and we bounce upside, look for the resistance here at 50 once again. And 50 puts us right at major support resistance on the crude. Anything back upside would get us above the 200 and the 50. We'll start looking back up to 51.56 to start. Taking a look at the weekly GC, price action again waffling between the two resistance levels over the course of the end of 2016, 2017. We are back on a move upside, so momentum is definitely on the GC back upside. So bigger picture, we're looking at 13.75. Let's take a look at the daily and the 4 hour. Price action again here at the resistance level pulls back. So while we have the movement to the upside, looking at that 1300 level, got to appreciate the fact that we've pulled back on the daily chart. So we look to the major support down here. And if we find that the market's going to hold here at 1265, then we start to look back up to 1273.4 first, then up to 1281.3, which would put us back up here in the resistance. By this time, MML charts most definitely might move forward. And then on the smaller time frames, it's obviously the intraday would also give us a range bound, and that would continue to move the momentum forward on the charts to that high of 1375. All right, Jedi traders, so that's the big picture. Again, make sure you check out the daily trend where each day I go over the smaller time frames, including, for example, the 10-minute ES chart. That gives us even the smaller time frame as we'll open up here the market into the Globex and Monday session. So we use anywhere from a 5 to 10 minute, gives us a smaller time frame. And the Globex session, which I tend to use a 1 minute chart, again with lower volume and dropping the time frame down and always putting it together. Like for instance, as we see here on the ES, again, the option to put the MML overlay on the chart, which gives us the opportunity, as we saw here in the picture in the beginning, MML overlay, be ready both trend directions, but always keep in mind where the bigger trend is as well. All right, so economics-wise, heading into week 18 here. Again, economics, we are looking at key events. We'll be looking at FOMC meeting. Begins on Tuesday. Again, Apple earnings, Facebook coming out this week as well. We also have payroll data. We have Janet Yellen coming up, and throw in a little bit of North Korea and upcoming French elections, and you got yourself a big what if next week decision time. So scrolling down on the big picture for next week, there's your bottom line. Again, feel free to read up the write-up here on my insight, where the big picture I think is right now, and the bigger picture is the fact that with the key events heading into next week here, and most notably Washington politics and economic reforms, technical momentum probably still remains in an uptrend, even though there sure are many naysayers out there, perma bears that will just continue to tell you that the market's going to turn at some point, and I told you so. Well, just continue to print that, and eventually it might happen. But meanwhile, you miss on this wonderful move to the upside, especially those two open gaps from Sunday's open. All right, so there's your bottom line coming into week 18. All right, Jedi traders, that concludes this week's Technical Momentum Outlook for week 18. Feel free to stop by at tradingfibs.com. You can see my website here, where each day I post not only the pre-market trend, but the trading session recap with a daily video. Always, if you miss all that, check it out at the end of the week 17 recap. And there's your Technical Momentum Outlook, so to keep you busy. Plenty of things to check out on my website, just trying to keep it simple, including a wonderful page on the basic trading rules as well. You can find me every day on Twitter at tradingfibs.com. You could also check me out at StockTwits. Follow my intraday trades. Where did it go? Let's pull that up quickly for you. StockTwits. There we go. Trading Fibs. You can follow me every day for those intraday setups as they happen, or feel free to join us in our trading room if you're interested in joining us in our community of like-minded traders seeking those highest probability setups. Feel free to email me, David at Trading Fibs. You may join us any Thursday or Friday to view the live charts happen as they happen in the trading day. Again, I try to keep the strategy as simple as possible. Throw in an MML. Actually, where's that wonderful chart? There it is, MML chart, together with the strategy. By keeping it simple, any market, any chart, any time frame will keep you disciplined, and as well as just simply leaving the crystal ball to the experts. I only watch what's in front of me on the charts, and I leave my bias at the door when trading. Hey guys, also check out my latest video here on the Murray math levels and Heiken Ashi bars, combining the two together. Again, I don't take any credit to these. This was introduced by one of our trading room members, and since then have tweaked it to my liking. And when I have the trend in sync with the HA bar study, I got myself a wonderful combo. As long as trade management will keep me in, if it doesn't offer me an opportunity, then I'll sit and wait for that trading setup on any given day, and sometimes it just doesn't happen. All right, guys, have yourselves a Blue Zone weekend wherever you may be. As we roll into week 18, have yourselves a good day, a good weekend, good day, good night, and good trading to you.